What's going on, everyone? Welcome back to Courtside Financial. If you're new to the channel, hit that subscribe button. We're almost at 500 subscribers and we just started this channel exactly a month ago. So thank you guys so much for the support. NIO is well documented on my channel. If you want to keep up with NIO, then you're in the right place. And lastly, make sure you hit the like button because that really does help the channel out a lot. So today we're going to be doing a highly requested video, NIO versus Tesla. Before we get started, I want to make a few things clear for those of you who are new to the channel. First thing is that I'm bullish on Tesla. I would never bet against Elon Musk. I watch the EV market very closely and I understand that Elon Musk and his team at Tesla are innovating at unprecedented rates. I am looking for an opportunity to add some Tesla to my portfolio. If I'm given that opportunity, I'm going to take it. But with that being said, I also think that the EV market is big enough for multiple players. I think that Tesla is the pioneer and they have kicked the door down for other EV companies to come in, including a startup like NIO. The CEO, William Li, said that as Tesla sales increase, so do NIO sales. So both companies actually share the same mission to steal market share from legacy-based automakers who are creating internal combustion engines. So that's one of the really big reasons for my bullish case on NIO. But with that being said, let's get into the video. First, we're going to talk about the stocks. NIO is currently up 171.54% for the year. The stock trades at $7.25. The stock has pretty much been on a rampage since it beat Q1 earnings in a tough economic environment. Tesla has been one beast of a stock. Tesla is currently up 349% for the year. The stock trades at $1,011.90. Pretty much everyone wants a piece of Tesla as it's becoming more evident that electric vehicles are pretty much an inevitable future. Tesla leads in technology and is the go-to maker of electric vehicles in my opinion. NIO is currently making market share its biggest priority as it fights for more brand believers. So they're still in their infancy / growth phase right now, and revenue has increased 56% this year, and I think it's likely to increase in the coming years with the market conditions they have right now. Tesla grew sales 15% this year and is likely to continue to grow over time, although 2020 might be a slowdown year for Tesla. They also are trying to gain market share specifically from legacy automakers, but Tesla is a business that is supply constrained, so they need to keep ramping up production to meet demand. NIO will get to this point eventually. NIO was founded in 2014. Currently, they have two SUVs for sale. They have the ES8 and the ES6. The ES8 is pretty much the bigger, more pricey version of the ES6, but the ES6 has been their best seller. The ES8 and the ES6 sell at a 1-to-3 ratio. So for every one ES8 they sell, they're pretty much selling 3 ES6. So the ES6 is their bread and butter. Consumers are pretty much looking for these smaller vehicles with more range, but they still want an SUV, and NIO has been catering to that segment of the market. They plan on releasing an even smaller SUV, which is the EC6. This is their Model Y competitor. I think that this vehicle will be huge for them, as it might even sell at a better ratio to the ES8 than the ES6 is selling. So we're going to see how this works out. I know it's going to probably be priced less than the Tesla Model Y. And I know in the last earnings call that I personally sat through, listened to, and take notes, they said that they already do have some pre-orders for the EC6 and that they'll be releasing the price in September with the vehicle. They just want to do R&D on the market. So I think what that means is that they want to see what the Model Y is selling for, and they want to potentially undercut them in terms of price to steal some of those customers. Overall, vehicle sales for NIO are up 81% year over year, which is what you want to see when it comes to a startup business like this. They're going to need to keep ramping up in order to make it in this cutthroat industry. The president of NIO, Lee Hong-Quinn, actually went on to say that they need to be doing double what they're doing within the next 2 years for them to actually reach profitability. NIO has a cash burn problem, which is expected for a company in this industry. Like I said, it's capital intensive, so it's going to take a lot of cash up front in order to start making steps towards being positive and having positive margins. But there's silver lining to the loss. If you look at net revenue in 2019, they lost $1.6 billion. For 2020, they're expected to lose somewhere around $1.1 billion. So the trend is good. It shows us that net losses are narrowing, and that's what we expect to see with an 81% increase in sales year over year. Now, with a company like NIO, it's important to also look at another big factor, which is the fact that the government has a vested interest in them. So if you're looking at the cash and the balance sheet, yeah, it's pretty bad, but it's getting better. And I don't think the C country's government is going to let this company fail anytime soon. Tesla has come a lot further than NIO, as they're expected to turn a profit this year for 2020. Deliveries grew 50% from last year. Because Tesla is an American company, obviously most of their business is in America. So that's why growth might actually slow down a little bit for the year. The unprecedented circumstances that are affecting this market are going to affect Tesla and affect a lot of other businesses. But that's why it's really good that they have invested into the C country, which is the world's biggest electric vehicle market, and is starting to recover and show a positive uptrend. Tesla actually has positive gross margins which sit over 20%. The stock is a desirable play on electric vehicles and pretty much something that a lot of people want in their portfolio if they're bullish on the EV industry, because the two biggest trends in the automotive industry are electric vehicles and autonomous driving. Tesla is leading the industry in both. They have the best battery technology, and they also have proprietary autonomous driving software, which puts them at the front of the race to level 4 autonomous driving, in my opinion. NIO is partnered with Intel's Mobileye to compete with Tesla on the autonomous driving side, which I think was a good move for NIO, because obviously they're just getting started and they can't be risking too much money and making too much risk with their business right now. So it's good to kind of outsource that and let Intel handle that. And they're also in the race for level 4 autonomous driving. Outside of cars, NIO is working on their NIO Power business, which could tremendously help out the company. The biggest part of NIO Power right now is their battery swapping service. NIO is able to swap out the lithium-ion batteries in electric vehicles in 3 minutes. Currently, they're only doing that for the NIO vehicles, but the CEO, William Li, did say that they didn't mind sharing their technology and leasing it out to other electric vehicle makers in the C country. Now, there are somewhere north of 500 electric vehicle makers in the C country, so this provides a huge total addressable market for NIO to provide this service to, and just leasing out that technology, BaaS or battery as a service, could help them reach profitability a lot faster. Tesla is way more diversified than NIO, with businesses like Tesla Solar. They're building the Tesla semi-truck, which is meant to kind of disrupt the freight industry. They're working on competitive insurance for Tesla owners, which actually could also disrupt the insurance industry by monitoring your driving habits and giving you competitive rates, as opposed to insurance who more subjectively come up with the rates that they charge their customers. In conclusion, I think this is a good time to hop in both of these stocks if you're long. Obviously, both of these stocks are up right now, but if you have a longer time horizon, then in your eyes, and you believe in the business model, then in your eyes, then both of these stocks should be looking undervalued to you. I'm part of the NIO story right now because I like to buy stocks when there's blood in the streets, and I do think that Tesla is trading pretty rich in the near term right now. So that's why I said if I get an opportunity to add Tesla to my portfolio, I'll most likely take it. In my opinion, I think Tesla would be the safer place to put my money right now, but I do like the valuation that NIO is at currently. So that was it for this video. If this video helped you guys in any way, make sure you hit that like button, make sure you hit the subscribe button, and make sure you leave a comment down below. I want to know what you guys think about both of these car companies.